Hello everyone, my name is Varun and welcome to the Tesla Stock Analysis for Dummies video. In this video, I'm going to share with you how anyone can do stock analysis for the companies they are interested in. I have come up with a simple 9-step framework which you can see at the bottom of your screen. If you are particularly interested in any of the sections, you can use the timestamps to navigate to them. So a quick disclaimer, all what you hear is for entertainment only. It is not financial advice. Please do your due diligence. Do not sue me. I have no money to pay you. As an investor, what's the mindset you should be having? You should think like a shark. I'm sure everyone's seen Shark Tank, right? And we know what kind of questions the sharks want to know about a business, and when and how do they convince themselves to invest in a particular business. This is exactly the same, just at a wider scale. So sharks look at the facts and not feelings. Don't get emotional with your investments, and don't just buy and hold and call yourself a long-term investor. You need to buy, you then monitor, and then you decide whether you want to hold, buy more, reduce, or sell it off completely. Now quickly, let's go through some of the basics about Tesla. What's Tesla's mission? Tesla's mission is to accelerate the world's transition to sustainable energy. It's important for us to know this. Who's the leader? We all know Elon Musk, and we need to know that he owns around 18%. He's the founder, he's the CEO, and the company was founded in 2003. He's a visionary, and he's also the founder of SpaceX, Starlink, and Boring Company. So he does a few things apart from Tesla as well. So what are Tesla's products and services? Tesla's business is divided into 3 key segments. Number 1 is automotive. You can see the cars Model 3, Model Y, Model S and X, and you can see some pictures over here if you've not already seen the Teslas. They also have full self-driving capabilities. Now Tesla is in the very early stages of making their cars drive themselves. We need to be practical that this can take time, but this is one of their future revenue models which they predict. They have regulatory credits which they sell. For those who are not familiar with this, for reducing carbon emissions, governments have given the electric vehicle pioneers some regulatory credits, so Tesla can sell these credits to other manufacturers who are not yet compliant. So that's the car business in general. There's services and others, which is after sales service, vehicle insurance, merchandise sales, etc. The third and the last segment of Tesla's business is the energy business, and you have 2 types of products in there. One is the energy storage products, which is the Powerwall and the Megapack, and the other one is the solar roof. The idea is that these products are able to harness the natural resources to be able to power your homes rather than the conventional method. So those are Tesla's current products, but what's the future roadmap? Tesla has laid out some plans for some of the vehicles which they plan to bring out in the market in the near future. The first is the Cybertruck. There's a Tesla Semi, Tesla Roadster. They also have expressed interest in monetizing full self-driving, and they are making technological advances in full self-driving. The long-term vision for Tesla is that your cars become your asset and they're able to pick up passengers even without you in the seat. So it's more of a ride-hailing network of autonomous vehicles, just like Uber, but without the driver. It's a crazy vision, it's a crazy idea. It's like making sci-fi movies a reality, the Jetsons world a reality. But we need to be practical. It's far, far away, but it's just good to know the ambitions they have. Very recently, they announced the idea of a Tesla bot. Now, the Tesla bot is an AI-driven humanoid, basically. They call it the Optimus, at least for now, which is supposed to automate the mundane and the repetitive tasks which humans don't want to do, or probably cannot do it at the efficiency which machines can. So they're going to start off with automating some of the tasks in their own factories first before it can even come to the market, but that's one of the products which is in the future pipeline. Of course, not near term. Then there's a $25,000 car which is also rumored to be there, but again not mentioned by the management. There could be possibilities of a Tesla App Store. As you know, Tesla has a TV inside in the car, so you could potentially imagine Tesla creating a platform like Google has for their App Store or Apple has for their App Store. So that could lead to a lot of revenue models, but these are not mentioned by management. These are just rumors, because Tesla being such a big company, people do speculate on what they could do potentially with the situation they have in their hands. Now here's a food for thought. Before we buy a new phone, what do? We always check a YouTube product review video, right? Or even if I want to buy a vacuum cleaner, I'm going to go and check if there are other people talking about this product and how are they finding it in their day-to-day lives, right? So before we buy a stock, shouldn't we check its product reviews to know what the customers are actually saying? Are the customers even liking it? There's a lot of hype around the stock, but what is the product all about? So in order to do that, I highly recommend to watch this unbiased video from Armando Ferreira, and I've put the link here, right? He does a fantastic job in giving a completely unbiased view. He's owned Tesla Model Y for 1 year, and he gives all the pros and cons very fairly, and then he gives his final verdict. So if I'm putting my money in Tesla, I want to know what the customers are talking about Tesla. I think that's the bare minimum one could do, isn't it? Now, let's look at Tesla in numbers. Let's talk numbers, let's talk data, let's talk facts. Let's keep feelings aside. So Tesla's core business is cars. How many vehicles did they deliver, and what's the trend line? So this chart from Hypercharts actually shows you the trend from 2012 up until 2021 for all the vehicles which they sell. And what you observe here is mentioned here in the key highlights. You observe exponential growth. And Tesla has given an outlook of growing greater than 50% for the near future. They delivered 499,000 vehicles in 2020 versus 936 vehicles in 2021 from two factories, Fremont, California and Gigafactory Shanghai. There are two new factories in progress, Giga Berlin and Giga Austin. What are Tesla's revenue segments? You can see the 3-4 businesses which we spoke about earlier, right? The autos, the energies, and the services. In this chart, you can clearly see that 88% of revenue in 2021 was due to cars. Okay, so while Tesla is a futuristic company with a lot of plans ahead, it is important to ground ourselves to assess some of the key fundamentals of the business based on cars. Cars will be the main driver of Tesla's growth for the foreseeable future, and anything else is a surprise upside. Tesla's revenue increased from 10.7 billion in 2017 to 53.823 billion in 2021. Okay, that's impressive. Let's look at Tesla's profits, cash flows, and debt. On the first one, you see gross profit. Now, in comparison to revenue, gross profit has steadily increased, and Tesla's gross margin has grown from 18.8% in 2018 to 25.3% in 2021. Similarly, the operating margin has grown from 9.2% in 2016 to 12.1% in 2021, and the net margin has increased from minus 16.7% in 2017 to 10.3% in 2021. Now, their margins have been improving steadily. This is what you want to see as investors, that are they starting to improve their margins, and do they have the capacity to expand their margins while increasing the revenue? That's the efficiency of execution which we want to see. Now, we also want to see free cash flow, because free cash flow is the amount, the money which the company has to reinvest in its business or return to the shareholders. And Tesla has generated free cash flow from minus 4 billion in 2017 to positive 3.43 billion in 2021. Now you can see a steady growth, and that's the positive sign we want to see in a company, so that the company can start reinvesting its profits into business expansion. And lastly, the net debt, right? So if I'm investing in a business, I want to see that yes, the business is growing, the margins are expanding, they have more cash, but are you growing the business at the expense of taking more debt? Because we don't want you to take too much debt for you to be able to grow, right? So Tesla's net debt is negative. What does that mean? They have more cash than debt, and if you look at the trend over here, it's steadily gone negative, so that Tesla has made their health better and better over time. Let's move to the next one. Let's talk about the total addressable market. So when we think about any business, what is the first thing we look for? How big is the pie? How big is the market? Here we're talking about the car market. Okay, so we all know that all the countries across the globe are trying to shift from combustion engine vehicles, the petrol, the diesel, the gas powered vehicles, to electric vehicles. This is a no-brainer. Everybody is incentivizing companies to move from their old ways to electric vehicles, and Tesla is one of the pioneers in making that move. So if you know ARK Invest, the famous Cathy Wood, they've done a research on the total addressable market in general and what's the vision they see until 2026. So firstly, EV sales have continued to take the share of car sales. So the EV sales are growing in comparison to the normal combustion engine sales. And 2026 forecast by ARK Invest is that the EV sales could scale eightfold from the current 4.8 million to 40 million over the next 5 years. This gives a compounded growth rate of 53%. And also one more thing which I want to highlight, that the cost of EVs are declining, because as end consumers, if we are not climate friendly and climate passionate, we are very pocket friendly. So if you make an EV cheaper than a normal gas powered vehicle, I will definitely consider it if you give me a lot more features. So if you give me a TV in my car and you allow the car to drive itself, and I can sit and play a game on my TV inside the car, I think I might consider it if you make it at the same cost or even a little bit higher or a little bit lower, right? So the cost of EVs declining is a key criteria, and this gives us an idea that the pie is actually big for everybody. So people talk about competition in general. I think the competition is actually not with each other. The competition is how do you innovate at scale and you manufacture at scale, where you bring the costs down and you make it affordable to the end consumer, because the demand is there. The end consumer wants to buy a Tesla, wants to buy another EV, and they would want to buy n number of different EVs. That's fine, and competition can exist as long as they all stick to one mission, is to turn the world to sustainable energy. If you recall what Tesla's mission was. Now, let's talk numbers. Let's see this complicated Excel. This is my discounted cash flow valuation model. I've taken 3 scenarios, and I don't want to go into too much detail, and I don't want you to look at that fair price 918 and then stop the video and go and buy the stock. Please don't do that, right? Understand that the valuations are based on certain assumptions. So I have 3 cases here. My bull case assumes that Tesla can sell 8 million vehicles by 2030. Why am I making these assumptions? What is my thinking behind all of that, right? So I'll give you some key highlights here. There's a Twitter handle called Troy Teslike, fantastic analyst. Now, this person has immense success rate, and his failure rate is around 2 to 3% to estimate all the Tesla deliveries based on its production capacity. Troy estimates Tesla to sell or make 3.8 million vehicles in 2025. Okay, this is his number. This is from his tweet. Okay, my bullish estimates are 3.5 vehicles in 2025. I've kept it a little lower than him. It's purely intentional. I'm using a discount rate of 7.9% and a perpetuity growth rate of 5% for those who are interested. If you have any questions, drop me a note here on why have I used these numbers. I don't want to get involved. I don't want to talk about it right now because it'll confuse a lot of people. I have not considered any robo-taxi revenue. Okay, I love the plans, I love the idea, but I'm not going to be silly and going to add some incremental crazy revenue and convince myself to buy the stock. No. And I've not considered any AI bot revenue. And I have also considered that their energy business and their service business is growing at a very slow pace, which is 10%. Okay, I'm not giving them any credit for their energy business. Simple 10% growth. Okay, I've been stingy there, even in my bull case. Okay, now with those assumptions, with my numbers which I've put in here and a 10-year discounted cash flow model, I get a fair price of $918 for my bull case, where Tesla will sell 8 million vehicles by 2030. Okay, that's my case number 1. I have another case, which is my base case. Now, in my base case, I'm saying that Tesla will sell 6 million vehicles by 2030. Not 8 million, 6 million. And I'm expecting short-term issues for Tesla in 2022. So the short-term growth could be stunted. because of supply chain constraints, or maybe a crazy recession, right? Suddenly things stop. We are in a crazy mood right now. It could be geopolitical issues or whatever it is. But I'm saying that, okay, even in spite of all that, it could be a short-term blimp, and by 2030, they'll still catch up to make 6 million vehicles a year. Again, I'm not counting any robo-taxis, I'm not counting any AI bot, and I'm not giving them much credit for their energy and service business. This could very well be considered a very, very safe assumption. Now, with some of the other assumptions here, my fair price is around 704 USD for the base case. Okay, this is my case number 2. Now, I have a third case, which is the Elon Musk case. This is Elon's tweet, September 28th, 2020. We do see Tesla reaching 20 million vehicles per year, probably before 2030. My bull case was 8 million vehicles. Elon says 20 million vehicles. But this is Elon Musk, right? He purposely forces aggressive timelines where he believes that by doing so, he can achieve goals much faster. This is Elon Musk's personality. So I don't think one should value Tesla as a stock based on Elon's estimates, but I just wanted to do this for fun to show you what the numbers could look like, and it goes up to 2554 USD fair value right now. So the point I'm trying to make is that you can make this number, you can make valuation models however you want it to be made, right? And the price, the fair price you pay, is the price what you believe the company can do. Okay, that is the most crucial thing here. It's the price you pay based on what you believe the company can do. And then ask yourself a question. If you do not monitor the progress of a company, how are you going to be sure that you've paid the right price? So let's put it all together. There are 3 cases which I put in: the bull case, the base case, and the Elon Musk case. There are 3 different fair prices I got. Okay, I'm not going to take an average and then create a fair price. No, I'm not going to do that. I'm going to monitor the progress and see what the company is doing and then decide my fair price. So the key highlights here are: vehicles are the key driver of Tesla's valuation. Robotaxis, AI bots are all surprises and may happen beyond 2025. That's okay. It's a good, happy surprise. Don't seek for price targets from social media. A price target is the price you are willing to pay based on what you believe the company is going to do. Now, for those entering Tesla right now, you need to manage your expectations for upside and downside. Okay, please be cautious and understand what you're buying into and when you're buying into. Wall Street has now understood the exponential manufacturing ability and cash flow generating ability of Tesla and has started to value it accordingly. Tesla has been delivering, and Wall Street expectations are estimating 50% growth as guided by management. Now, due to immaculate execution in 2020 and 2021, and the management's commitment to grow at 50%, the stock is highly sought after. How is Wall Street valuing Tesla? I'm going to use one example which I found online to explain my point. This institution here values Tesla at around 11.8 million vehicles in 2030. My bull case is 8 million vehicles. They are using a 20-year discounted cash flow, of course at a much higher discount rate than mine, and I am using a 10-year discounted cash flow at a much lower discount rate. Tesla has predictability, and that's why this is the model chosen. Now, for 2022, they're estimating 1.5 million vehicles, and in fact, most of Wall Street is expecting 1.5 million vehicles by 2022. So if Tesla misses on that, it's going to be a big problem for the stock near term. My bull case is 1.4 million. So basically, I have undercut Tesla a little bit for what the market is believing they would do. Now, Wall Street's average price consensus from tip ranks is 1120. You can see this here, right? Now, I would take these analyst price targets with a pinch of salt, because once the price goes down, these analysts are very fast to tweak their assumptions and bring down their target price. I told you, these models are super sensitive. You can put any number and any assumptions to make it look whatever you want today. but people will be very fast to change their numbers if Tesla starts missing the estimates which everyone expects them to do. So take it with a pinch of salt. Don't go look at this number, oh, 1120 right now is 900, let me go and buy it. So please don't do it that way. Let's talk about technical analysis, and I'll explain to you why I'm bringing this up. Because as I keep mentioning, valuations are very subjective. People have a lot of biases on their liking of the company and the current stock price. Numbers can simply be tweaked to get any outcome as we like. Based on the company's ability to grow, different companies get different multiples from investors. It's so damn hard to find a fair price, isn't it? It's so damn hard because everybody has an opinion. Market is made up of a lot of different people. It's made of long-term investors, it's made up of short-term traders who buy and sell very fast, and it's made up of algorithms as well. Yes, 60 to 70% of buy and sell decisions in the markets happens through automated code programs, algorithms, right? So we need to understand this aspect because then we can predict the direction in a lot of cases. So if we think we're smarter than the market and faster than the market, we are lying to ourselves. Okay. So if valuations are subjective and everyone can have its own opinion, how the hell do I bloody decide when to buy? Okay. So I personally would combine fundamental analysis, which is my valuation models, with technical analysis. Why do I do that? Because whatever the truth is, it is somewhere hidden in the charts. Charts tell us what the market is willing to pay. When in doubt, look at the chart for clues where the buyers and the sellers sit. Buyers are at support levels, sellers are at resistance levels. Support means there was a lot of buying pressure in the past. Resistance means there was a lot of selling pressure in the past. History does not repeat, but it often rhymes. Okay, so charts give you a lot of idea about stocks. As a long-term investor, you may consider buying at support levels if your valuation supports it. Okay, use trend lines to identify if we are in uptrends or in downtrends. In downtrends, I would be cautious. Use moving averages to understand if we are in a bull run or in a bear run. So I would be cautious if we are below the 200-day moving average. Now don't ask me why this is the case. It's like a textbook. Everybody in the market follows it, and if enough people believe in it, it becomes successful. Hint, crypto. So what are the charts saying? This is the Tesla chart, and look at the long-term uptrend. This is the long-term uptrend from a long time ago. But in the short term, we are in a downtrend. The all-time high is 1239. The current share price is around 876. The next resistance is at 942 and 980, represented by the red lines here. The next supports are at 848, 792, 764 and 744. You can find spots in the charts to actually figure these out. The moving average 200, which is the light blue line, which is very faint here, is around 828. And the 50-day moving average is 982, which we're already below 982. So what are the key observations from these charts? What are the charts telling you? So this is a lot of fancy work, right? But are you telling me something? So there was a strong bounce on the 200-day moving average somewhere around here. There was a strong bounce here at the 792 level. And if the 200-day moving average breaks, Tesla stock will be in short-term pressure because traders will sell it and algorithms will also start selling it. 200-day moving average is a universal language. If the stock starts to go below its 200-day moving average, it means it's in a bear market. Okay, you don't need to agree or believe in it, but there are certain rules of the market you must respect. If you try to fight it, you will lose the battle. If you try to be smart and connect the dots, you can make a lot of money for yourself, and most importantly, you can protect your risks, right? Because I think protecting losses is as important as making money. So do think about these aspects when you're considering your analysis. Let's talk about earnings reactions. What happened last quarter, and were investors happy with the last quarter, and how did Wall Street react? How did the market react? So historically, Tesla has been beating consensus estimates repeatedly. Okay, so the way this works is Wall Street would make some estimates about what a company would do next quarter, and there is always a consensus estimate of the top 30, 50 analysts, and they come up with a number. And if the company beats it, it's considered healthy. If the company does not beat it, the algorithms will beat it and the stock price will go down. But Tesla has been consistently beating Wall Street estimates. Good so far, right? But be cautious. The reaction last quarter was negative by Wall Street in spite of the beat. Now, why was this? I have put some highlights from the earnings transcript from FinCredible, right? And Elon spoke about supply chain challenges. He also said that we are not going to have any new vehicles in 2022. And he focused a lot on full self-driving and the AI bot, right? So investors felt that that was a distraction because bear in mind, Wall Street is purely valuing Tesla on its ability to produce cash out of the cars they are selling. Cars. So any bad news about cars and any distraction is going to spook them. And they're going to be like, oh, now they're going to focus energy on that AI bot. What about my cars? My entire valuation model gets upside down. So that is a knee-jerk reaction. It's a fair reaction because as investors, their demands are based on their assumptions. So don't always think that Wall Street is drunk and stupid. If the stock is going down 10% or 15% after earnings, pause and think why. Don't feel that, oh, this is my best chance to buy. Yes, it could be, but think before you do that and just don't go blindly because sometimes you may catch a falling knife and the knife will keep falling and rip you apart. Okay, but Tesla still continued to guide 50% growth. So that was healthy. So then the stock ended up balancing itself around that 800, 900 range. And it's still not gone as down as the other companies because investors are giving Tesla good credit for navigating through these supply chain constraints in 2021 and still delivering on their promises. And they've done it for the past 2 years. So investors are giving Tesla credit for that. Okay, so far they are liking the execution ability from Tesla. But what's going to move the Tesla stock? As I said, analysts have always a consensus estimate. So the next quarter, there are certain estimates for revenue and earnings per share. Revenue for next quarter is estimated on an average to 18 billion and the quarter after that is around 20 billion. So if Tesla reports revenue which is a lot higher than the most highest analyst estimate, you could expect the stock to go crazy in the upside. But if it's around the 18 billion range and it beats the range, it means the Tesla will continue its positive trajectory. But God forbid if Tesla cannot match Wall Street expectations. Tesla or any other stock for that matter needs to keep beating Wall Street's estimates, else it can put pressure on the stock. Wall Street investors are shareholders. Their demands are as good as any other shareholders. They own 44% the institutions combined. So if analysts are giving a range on what they expect Tesla to do next quarter, like it or hate it, Tesla stock to perform well must beat those estimates or at least match those estimates. This is the name of the game. We've spoken about numbers, we've spoken about the charts. What are Tesla's risks? Every company has a risk, every stock has a risk. So what are the risks here? Tesla can have supply chain constraints. We are all in a situation where we are chip constrained. There's ports locked down. COVID is still somewhere there but not gone yet. So supply chain constraints is a valid constraint. It's a medium risk. It's an amber colored risk. It is a risk, of course, because if Tesla, due to supply chain constraints, cannot meet the 1.5 million vehicle delivery target in 2022, is going to put a lot of pressure on the stock. Okay. Missing Wall Street estimates is the byproduct, right? If you miss that, it's a huge risk. So it's the same thing. As long as Tesla can keep delivering on their promises, the stock will move in a positive direction. I can't commit how high or low it can go. Nobody knows. If somebody tells you that Tesla can go 2,000 or 5,000 by X number of times, run away. Anyone who speaks about the market in certainty, run away from that person. Okay, so that's my warning to you. Think for yourself. Now, the third risk is Elon's time division between companies. It's not a greatest risk. Elon's been doing it for a very long time, but it is a risk, right? If he starts to put a lot more focus and energy on SpaceX, for that matter, or any other company which he's looking at, it could be a bit of a challenge in terms of Tesla's ambitions moving forward. There could be macro risks, inflation risks, the risks of the Fed doing something crazy. So we've covered that in one of our scenarios, right? So this is a high risk. There's a risk of upsetting customers. If you make customers unhappy due to some kind of issues in your product or your service, it's a problem. Now, Tesla has been getting good customer feedback in general, so this is a low risk. There's a big geopolitical risk, of course, because there's a lot of dependency from factories in certain parts of the world. So if there's geopolitical issues, it could put pressure on Tesla in its ability to execute in the way they expected to execute. Now, another risk for most people could be Elon's tweets, his eccentric nature. It's not for everybody. We understand that, right? It's not for everybody. If Elon can tweet something and can make the stock price go down 7%, 10%, nobody wants that kind of adrenaline rush like you're sitting on a roller coaster. It depends on your age, your vision, your assumptions, and your belief in what Tesla can do. So it is a risk for most people, and it will stay as a risk forever because that is what Elon Musk is all about. And lastly, there is a risk which I hope it never happens, but Elon has a lot of hate and envy. So his safety could be a risk. Again, I put that as a low risk. How early or late is it to invest in Tesla? Let's try to understand what stage we are in. Okay, these are my final thoughts, right? Every company has a growth stage. The first stage is a startup. The second stage is young growth. The third stage is high growth. The fourth stage is mature. Then it's stable growth and it's declining growth. Okay, ask yourself where Tesla is. Look at the statement here. It starts delivering numbers according to its promises, and it is supporting its growth story. Tesla is in stage 3, high growth. Okay. Now, let's look at Tesla products in an adoption S-curve. So for those unfamiliar with an adoption S-curve, every time there's a new product or a service in the market, there's always stages in which it gets adopted. Some products are in very early days where it has very few pilot customers, where you get feedback and develop from it. So whoever's watching this video, you are in my early days because this is my first ever video. So please give me all the feedback you can, so I eventually reach an inflection point where I can reach more users, and then I keep making so many videos that I reach in maximal growth and I quit my 9-to-5 job, and then it'll be eventually an inflection point where somebody's going to outsmart me and make better videos, and then I'm going to start plateauing, right? So that's my life journey through the adoption S-curve. But let's think about Tesla, right? Electric vehicles are in the maximal growth stage. It's starting to pick up exponentially, and we are just at the beginning. Energy and solar is still an early inflection point. I think they haven't still managed to find a way to scale this properly, and we need to subtract some points for that, right? I mean, that in my valuation models, I never considered high growth for this anyways. Full self-driving. The technology is developing, but if we are believing that it's ready for mass adoption, I'm sorry, we are lying to ourselves. Even aeroplanes today, in spite of almost being driven automatically, there are still a pilot and a co-pilot sitting inside. Somebody told this to me, I think in one of the tweets somewhere, and I thought it was fantastic. It was a fantastic observation, because you're expecting a car to be driven automatically with so many edge cases, scenarios around the road. Sometimes a paper would fly off, or a dog would come across, or someone would cross the road, you won't even know. There's so many endless possibilities, and Tesla is depending on camera vision. They're not using LiDARs and other radar sensors, and they are taking a trajectory which is very different. Actually, I like that trajectory, but we need to be patient, okay? Tesla is a company which is trying to make the sci-fi world a reality, but it's in its early stages, and full self-driving is definitely in a very early stage. And lastly, the new idea, the Tesla bot, right? Very, very early. It's just a concept. So please don't include Tesla bots in your valuation models. It's very far away. You need to let companies at least get to these inflection point stages before you start to put some numbers into your models, because it's too soon. It's too soon to include it. But having seen all of this, ask yourself, what do you think? I'm not here to put words in your mouth. My entire thought here was to make you think of a process which then eventually convinces you to decide whether you want to invest in this or stay away from it. And I have been following these steps which eventually helped me decide. So I'm asking you to think, where do you think we are in the journey? And feel free to drop a comment. Final thoughts, I'll share this chart from one of my favorite Twitter handles, Brian Feroldi. And basically my intent here is to share with you an approach, my thought process before investing in any stock. There is no guarantee in investing. Nobody knows the future, but by following a good research process, we can reduce the odds of failure. That is the best we can do. Don't invest in anything blindly. Buy, monitor, and then decide. Observe facts, not feelings. Follow the business and not the stock. Keep learning, and please, this is not financial advice. Do your own due diligence. I'm going to sign off today. I hope this helped you. This is my first ever video. If you want to join our community, we'll put some links at the bottom. Feel free to share some feedback, some love, some hate, whatever you like. I'm thick-skinned. I don't care. I'm doing this because this helps me. It helps me in my own process, and I plan to do this for 30 other companies in my watch list. I'll keep sharing it. People watch it or don't. It's my cheap throat. All right, signing off. Thank you, guys.